All right, welcome back. It's Wednesday, December 17th. And if you're feeling a little uneasy right now, you're not crazy. The charts look ugly. The headlines are loud. And social media is doing that thing it always does, where everything is either about to moon or about to go to zero. We've got people screaming manipulation. We've got people screaming collapse. We've got people screaming that this is the end of Solana. And somehow, this is all happening in the middle of a market that hasn't actually gone anywhere. Tonight, there's a presidential address. This morning, we had a violent whipsaw. And right now, sentiment is sitting deep in fear, which historically is when the worst takes travel the fastest. So today, we're going to slow this down. We're going to separate what actually happened from what people are projecting. We'll talk about the price action. We'll talk about the lawsuit everyone is panicking over. And we'll talk about why confusion feels like certainty right before the market reminds people how this works. No hype, no doom, no engagement farming, just context. Let's get into it.
You're listening to the SENB Daily Brief, powered by Whole Shot Coffee.
All right, let's start with the market. Bitcoin first. BTC had a rough session. We saw a sharp move up into the high 80,000s, followed by an immediate rejection, and then a fast move lower that cleared liquidity on both sides. This wasn't a clean breakdown. It wasn't a breakout either. It was a whipsaw, the kind you get when leverage is high, liquidity is thin, and everyone is leaning just a little too hard in the same direction. Structurally, Bitcoin is still range-bound. Volatility spiked, but the larger picture didn't change. That matters. Next, we have Ethereum. Ether tracked weakness across the board and underperformed on the bounce. We're seeing the same theme here. Lower highs, heavy overhead supply, and very little urgency from buyers. This isn't panic selling, it's hesitation. And hesitation tends to show up when the market is waiting for confirmation, not when it's convinced the trend is over. XRP continues to grind lower, still stuck inside its broader down channel. Momentum remains weak, and unlike previous cycles, we're not seeing aggressive dip buying step in yet. That doesn't mean it can't bounce, but right now, buyers are cautious, and sellers aren't in a rush either. Solana was hit harder today, and we'll talk about why later in the show. Price stayed under pressure, momentum rolled over, and sentiment around the asset is clearly fragile right now. Important distinction, though. This was selling into fear, not a structural failure of the chain itself, and that difference is going to matter as we move through the rest of today's discussion. So zooming out, what we're seeing today is not capitulation. It's not euphoria either. It's uncertainty. And uncertainty is where markets tend to do the most psychological damage before they make their next real move. So, that's your market snapshot. When we come back, we'll get into today's top story, the narratives driving this fear, the whipsaw everyone's reacting to, and what's actually worth paying attention to. Covering it all after this.
You're listening to the SENB Daily Brief, powered by Whole Shot Coffee.
All right, welcome back. Let's talk about what's actually driving today's anxiety, because it isn't just price. It's narrative overload. We came into today with a lot of tension already baked in. There's a presidential address scheduled for tonight. There's uncertainty about tone, direction, and policy. And markets hate one thing more than bad news. They hate unknown news. So what did we get instead? Positioning, speculation, and a market that was already stretched. This morning's whipsaw, the fast move up, the sharp rejection, and the equally fast move down wasn't a signal, it was a reset. Liquidity got cleared on both sides. Overconfident longs got punished. Late shorts didn't get rewarded either. That's not manipulation. That's what happens when everyone is leaning the same way in a low liquidity environment. And when price action stops making people feel smart, they look for explanations. That's where the fear comes in. Right now, market sentiment is sitting deep in fear. Retail is bearish. Social timelines are filled with "this feels wrong" posts. And suddenly, every move down is proof that something is fundamentally broken. That's usually how it sounds right before people rewrite history to explain why they didn't buy earlier or why they sold too late. Here's the reality. Liquidity hasn't disappeared. Institutions didn't vanish overnight. Infrastructure didn't suddenly stop working. What disappeared was the idea that the market was going to reward impatience. And when that happens, confidence cracks first, not price. You're also seeing something else today, the collision of macro uncertainty with crypto's favorite pastime, front-running narratives. People aren't trading facts right now. They're trading expectations about expectations. And that's why everything feels unstable, even when the structure hasn't actually changed. This doesn't mean risk is gone. It doesn't mean everything is fine. It means the market is uncomfortable. And uncomfortable markets are where bad takes go viral and good analysis gets ignored. All right, when we come back, we're going to slow this down even further. There's a story circulating right now claiming This is the beginning of the end for Solana, based on a lawsuit, a headline, and a lot of fear. We're going to break down what that case actually says, what it doesn't say, and whether this is a real structural risk or just another example of engagement farming in a fearful market. We'll cover it in detail after this.
You're listening to the SENB Daily Brief, powered by Whole Shot Coffee.
All right, let's talk about it. Because if you spent more than 5 minutes on crypto Twitter today, you probably saw the headline, "This might be the end for Solana." The claim is that a federal lawsuit, specifically a second amended class action complaint, somehow proves that Solana's core architecture is structurally broken, legally toxic, and destined for collapse. So let's slow this down. First, what actually happened? A federal judge allowed plaintiffs to file a second amended complaint in a case involving Pump.Fun, Solana Labs, and other Solana-linked entities. That matters, but not in the way social media is framing it. This was not a ruling on guilt. It was not a verdict. It was not a finding of wrongdoing. It was a procedural decision that allows the lawsuit to continue to the next phase. That distinction is important because allowed to proceed does not mean proven. It means the court said, you may update your complaint and the defendants will now respond. That's it. Now, what are the allegations? The plaintiffs argue that certain meme coin launches on Solana, specifically through Pump.Fun, were not as fair as marketed. They claim that insiders, using validator mechanics and transaction priority tooling, were able to buy earlier, cheaper, and faster than retail. Retail, according to the complaint, was pushed to the back of the line, often buying at inflated prices right before insiders sold. If that sounds familiar, it's because a lot of people experienced exactly that. And this is where the story feels credible. Because meme coin launches are chaotic. Priority fees do exist. MEV is real. And retail does get clipped in fast, speculative environments. So far, nothing controversial. Where things start to get exaggerated is what comes next. The viral post claims this lawsuit puts Solana's entire architecture at risk, that if the court agrees with the argument, Solana itself becomes the problem. But here's what's missing. The complaint does not say Solana cannot function. It does not say proof of stake is illegal. It does not say fast block times are unlawful. What it challenges is how certain tools were used, how certain launches were marketed, and whether insiders had unfair advantages relative to retail. That's a conduct question, not an existential one. There's another detail conveniently missing from the panic narrative. One of the key entities often cited in these threads, Jito Labs, was voluntarily dismissed from the case earlier, meaning, even within the lawsuit itself, some of the most alarming claims have already been narrowed. That doesn't make the case disappear, but it does matter. Now let's talk about the part that really signals engagement farming. Price predictions. Claims that Sol is going to $5 or 10 or 0. Those numbers aren't analysis. They're emotional anchors. They exist to scare you, not inform you. Could this lawsuit create volatility? Yes. Could it generate ugly headlines? Absolutely. Could discovery, if it happens, produce uncomfortable information? Also yes. But that's a very different statement than Solana is finished. Real systemic failures don't start with class action amendments. They start with halted chains, frozen funds, missing collateral, or insolvency. None of that is happening here. What is happening is something much more familiar. A fearful market, a complicated legal story, and a social media incentive structure that rewards the most extreme interpretation possible. That doesn't mean ignore it. It means understand it. This is something to watch, not something to panic over. And if someone tells you they'll announce publicly when it's time for you to dump your bags, they're not protecting you. They're building an audience. So yes, this lawsuit matters, but whether it's a real structural risk or just another fear cycle being monetized depends on facts, not timelines. We'll keep watching it, and when we come back, we'll open the mailbag with your proof of thought submissions, reading them all after the break.
You're listening to the SENB Daily Brief, powered by Whole Shot Coffee.
Welcome back. Before we wrap things up, let's check in with the community. This is your proof of thought mailbag, where we pull reactions, questions, and observations from people actually paying attention. First one today comes from Stacking since 2017. They say, this feels exactly like every other cycle where people confuse discomfort with disaster. That's a veteran take. Next up, Exit Liquidity Larry. He writes, when sentiment gets this bad and nobody wants to touch anything, that's usually when the market starts doing the opposite. Larry, History's on your side more often than not. And this one from Probably Too Early, they say, I don't know if this is the bottom, but the confidence in doom feels familiar. That's a good way to put it. Markets don't ring bells, but they do leave emotional fingerprints. All right, we appreciate every message, every comment, every perspective shared. Keep them coming. When we come back, quick SENB update, and then we'll close this out.
You're listening to the SENB Daily Brief, powered by Whole Shot Coffee.
And we're back. Thanks for hanging in there. A quick SENB update before we wrap today. The Daily Brief continues to evolve. And if you've been listening consistently, you've probably noticed the pacing tightening up and the focus getting sharper. That's intentional. The goal here isn't to compete with noise. It's to give you context you can actually use when everything else feels reactive. We'll continue doing daily briefs during the week, longer form breakdowns when the story deserves it, and proof of thought segments that keep this a two-way conversation, not a broadcast at you. If you're listening, sharing, or contributing, that's how this grows, and that matters more than numbers. But since people do ask, yes, the data is starting to move. YouTube continues to lead. That's where we're seeing the strongest engagement, the most consistent discovery, and the clearest signal that the Daily Brief format is landing. X and Rumble tend to follow shortly after, almost like altcoins following Bitcoin. Instagram lags a bit, but even there, engagement is trending in the right direction. Music is still pulling the biggest raw numbers, which is exactly what we expected. But here's the important part. Over the last few days, we've seen a noticeable lift in Daily Brief views specifically. That tells us something. It tells us people aren't just here for noise. They're here for context. On the ecosystem side, SENB continues to trade organically. Low liquidity, small holder base, no hype mechanics, just gradual participation. Exactly how an early-stage media token should behave. And yes, streams across Spotify, Apple Music, Amazon Music, and the rest of the platforms are up as well. That momentum matters because it tells us the network effect is working. Different content, different audiences, same signal. People are finding their way in. All right, that's your project update. Now let's close this out. That's next.
You're listening to the SENB Daily Brief, powered by Whole Shot Coffee.
Welcome back, everyone. Days like today feel heavy. Volatility, fear, loud narratives, bold claims. And in moments like that, it's easy to confuse motion with meaning. But markets don't end on loud days. They end when people stop paying attention. And we're very much still paying attention. Nothing we cover today changes the long-term reality overnight. What it does change is how important patience, context, and perspective become. Fear is loud. Signal is quiet. And the people who do well over time are the ones willing to sit with that silence a little longer than everyone else. That's going to do it for today's SENB Daily Brief. We'll be back tomorrow. But until then, stay sharp, keep an open mind, and don't let FUD rule your decisions. The SENB Daily Brief is a production of SENB Hero Media in collaboration with Whole Shot Coffee, coffee that fuels champion. Written and hosted by yours truly, SENB Hero. Production, editing, and scheduling handled by Maya Valencia, who somehow keeps me on time, caffeinated, and occasionally polite. Original theme music composed and produced by Paul Hahn, the community legend whose beats hit harder than a Fed rate hike. Research support provided by the SENB community. Proof that sarcasm and spreadsheets can coexist. For more shows, merch, and on-chain chaos, visit senbheromedia.com. Thanks for tuning in. Stay caffeinated. And remember, if it's not in the brief, it probably wasn't bullish anyway.
Set my wallet free.